I think 2023 is going to be a very difficult and volatile year as far as returns are concerned. So I think investors need to focus on the longer term. These kind of volatile markets are going to continue at least for the next 3 to 6 months. And therefore, my suggestion is stick to large cap companies, large cap sector names from promising sectors where the risk reward is in your favor. And most importantly, give a longer time frame for your investments. In the short term, your stocks could underperform. But in the longer term, if you follow a small SIP process, my sense is over the next say 2 to 3 years, you could build a good wealth portfolio, provided the time frame is long, and I think your selection is very clearly tilted toward the large cap, which I feel offers a very good, reasonable risk reward opportunity. So I think you should not get worried of the volatility in the short term, but yes, longer term you should have a discipline of continuous discipline in SIP based investing. My guess is Gland Pharma has continuously disappointed investors in terms of their quarterly numbers, and I think the markets are not going to immediately look at this stock or typically invest here, because clearly numbers don't give you that kind of confidence. More importantly, I think I would be prefer to wait for the March quarter and hopefully see what is the kind of management commentary coming in here, because to a large extent, there's been a significant damage on the EBITDA margins, on the revenue growth. So I would say that if at all you're planning to buy, I think wait for the March quarter. One could get a better assessment after the March numbers, and that would be the right time to allocate money here, but not as of now. As of now, I would avoid the stock, but those who hold can continue to hold on. I think as far as L&T Finance is concerned, I think the investor has purchased the stock at a very high level, and I don't think it's going to be possible for him to make money in the very near term. Would suggest him that if he can convert his holdings to IDFC First Bank, which looks to be pretty attractive from a 12 to 18 month time frame. I would believe Deepak Fertilisers he can continue to hold if he has a 12 to 18 month horizon. The company has been doing very well, and just to inform, the company is not a fertilizer company but a specialty chemical company. Has now done a small expansion. The benefits of that would be visible in FY24. So I think Deepak Fertilisers he can even think of averaging a little more at the current level and possibly take a time frame of 12 to 18 months here. No, I think amongst the stocks you mentioned, I think Avanti Feeds and Chemcon, I think the investor can hold on. Clearly, when earnings don't come up to expectations, I think there is definitely disappointment and the stock underperforms. But I think you got to look at the bigger picture. Normally, whenever you look at investing in a company, you have to take the next 1 to 2 years earnings perspective. What is the kind of earnings growth which is expected? So, near term, headwinds would obviously be challenging. It's difficult to quantify the company's prospects on a quarter to quarter basis. As far as Hero Motor is concerned, I would believe within the two-wheeler pack, it's one of those companies which has underperformed significantly if you compare it to TVS or Bajaj Auto. So I would believe that if the investor wants to get into a slightly aggressive kind of stock, I think TVS Motors could be a better choice. He could definitely make a reasonable risk reward better as compared to Hero Motor. No, I think the previous quarter numbers were quite disappointing for Birlasoft, but I think looking at the kind of business model and the kind of clients Birlasoft caters to, if the investor has got a 2.5 year kind of time frame, then I think he can use the weakness to get into the stock. See, most of the IT companies, the smaller IT companies are definitely struggling because margin pressure is evident, and I think the headwinds from US and Europe, where majority of the clients come in, is still taking a lot of time. So I think you will have to, obviously, battle this volatility in the short term. But yes, from a 2 to 2.5 year perspective, you could definitely hope to make a decent risk reward. So if you are a contra investor, you can take that high risk and a little bit of underperformance in the short term. You can definitely nimble into it at the current levels, but keep a time frame of 2 years and above. Yeah, I think Cheryl, difficult to quantify multi-baggers here, but I would give a simple kind of checklist what we follow. First of all, we look at the business model. I think any company in the market has to be identified based on its business, because if the business is weak, then I think no institutional investor or HNI investor would be interested. So the business has to be unique. It has got to have a lot of competitive. I think stocks like Mahindra, stocks like L&T, stocks like Ambuja Cement, I think this offers a lot of value if the investors have a 2 to 3 year kind of time frame. So I think there are lots of opportunities available. I think you need to just have a lot of patience and conviction when you make a fundamental call. Yeah, I think as far as Borosil Renewable is concerned and Godrej Agrovet is concerned, I think these are very strong businesses. Godrej Agrovet has shown a dip in the Q3 numbers, but longer term, I think this business model is very strong. My suggestion is Godrej Agrovet, take even average at the current odd levels and take a 12 to 18 month time frame here. Borosil Renewable also has shown a softness in numbers, but their recent expansion is going to get reflected in FY24. So here the suggestion would be to hold on. Yeah, I think Tejas network has worked out probably very well for the investor. I think they could obviously look at booking some profits here and retain the rest for the next say couple of years, because recently the company has got a large order for 5G rollout. So that is definitely going to help them show better numbers for FY24 and beyond. See, I think given the choice, Archean Chemicals looks very interesting. They are one of the large players of bromine in India. In fact, they have now gone in for a major expansion, and that benefit would get reflected in FY24 numbers. And the stock trades at a very decent valuation. In fact, the Q3 numbers are very solid. My sense is this kind of traction will continue for the next say 12 to 18 months. So I think the Archean Chemicals looks interesting. I think probably one could risk reward here. I think as far as HDFC Life is concerned, I think unless the investor has a short-term view, I think he can definitely convert it to a federal bank or IDFC First Bank. In the very near term, HDFC Life is going to underperform because of the taxation changes done in the recent budget. So I think HDFC Life can be converted. As far as IDBI Bank is concerned, I think the investor should hold on, because there have been some serious discussions on a strategic investor coming in here, and probably in the next say 3 to 6 months you could probably see some action coming in here. So IDBI can be held on, but HDFC Life from a short-term perspective, if the investor wants to switch, he can look at Federal Bank or IDFC first. See, I think from a long-term perspective, this is a company which is focusing on high value-added specialty chemicals, and I think once the incremental capacity comes in, I think there's going to be a lot of operating leverage play here. Obviously, you'll have to wait for at least a couple of quarters before you actually see the numbers trickling in. But I think from a 12 to 18 month horizon, if the investor wants to take a call, I think this would be the right time, considering the fact that the stock has underperformed, and obviously once the new facility starts, that would offer a decent risk reward. But I think time frame here should at least be about 15 to 18. Only then one can expect a decent return. No, I think they could possibly average out more, because see, the current December quarter numbers which came out had a extraordinary one-time item. If you exclude that item, definitely things the performances were not that bad. But I think it's going to take a long time before Biocon resumes its upward journey. So I think if you have a 2-year time frame, then I think you could nimble a small quantity at the current level, but keep a time frame of at least 2 years plus, because recovery on the earnings side is going to take a little longer. I would believe that if the investor has at least a 12 to 18 month time frame, then I think he can accumulate more, considering the fact that SBI reported a very strong Q3 number, and I think the fourth quarter is going to be equally strong. More importantly, I think SBI is looking at a lot of value unlocking initiatives, especially from their app. Also, the other subsidiaries like SBI Life, SBI Capital Markets is doing pretty well. So I think probably in the next say 12 to 18 months, one could look at targets of 650, 675. So definitely there's a lot of value catch up going to happen. But I think you'll have to face the volatility. But longer term, definitely prospects are positive. Campus Activewear has underperformed in the markets, for the last 2 quarters, and the overall footwear market has seen a significant amount of demand compression. My sense is longer term prospects definitely look good, but at these levels also Campus looks fairly expensive. So I think he should wait for a little time before he gets into the stock. If he's holding the stock, I think keep at least a 18 to 24 month time frame. I think definitely business will pick up, but in the very near term, markets are experiencing a shortfall in demand. I think if you're looking at the next say 2 to 3 years, obviously looking at the kind of growth in the automobile sector, most of the bearing companies have been doing well. I think we have seen very strong number from Schaeffler, SKF India. So Timken is also a very large player operating in the commercial vehicle, tractor and the passenger car space. So if he's got a 2 to 3 year horizon, he can obviously buy on declines and include it as a kind of